Good morning. It's Wednesday, October 8th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So gold futures closed above $4,000 an ounce for the first time, driven by concerns about the U.S. economy, the government shutdown now in its 8th day, contributing to its rally. Prices have risen about 50% this year with uncertainty surrounding the global trade, the independence of the Federal Reserve, and U.S. fiscal stability. As a result, gold's on track for its best annual performance here since the 1970s, with central banks and investors really seeking that protection here from any potential market shocks, driving this impressive trend. So we're also seeing the dollar index tacking on about 0.3%, sit at 98.56, with the sea of red across the board in all the foreign currencies here. The dollar index here hit a double bottom in July and October, now has formed a lower high on the charts and has broken above the resistance in the recent downward trend. So the question that I'll get, and I'll get a lot of calls about this, is they'll say, can gold continue to rally alongside the dollar? And what this is known as is a one-factor model. A one-factor model is a statistical or financial model that explains the behavior between a set of variables attributing to a single common underlying factor. So if this, then that. You really want to get out of that particular habit. You want to expand your process into a multi-factor model. So you want to ask yourself, what are treasury yields doing? And this is where I make a laundry list. And it doesn't matter what commodity you're trading. You could trade anything from cocoa to lumber to the U.S. equity markets to the agricultural products. You want to have a multi-factor model. You don't want to just say something's overbought, oversold. It's got this factor, then that thing are driving this thing. Your feelings, you want to check all this at the door, and you really want to expand your process in a multi-factor model. So you look at what treasury yields are doing. And treasury yields, they're continuing to edge lower here. And we saw 10-year treasury yields. They saw an outside bearish reversal on the chart. That's where it makes a higher high than the previous high, closes below the previous low here. And then what it's doing is it's continuing to work its way lower. So it's signaling another lower high on the daily chart. Now, while gold futures, they held those lows, they closed near all-time highs yesterday. And I talked about in the Metals Minute, when I came in the morning, we breached 4,000 in the overnight session. We sold off. And I told you that I believe that we will challenge that $4,000 mark. And that's exactly what we've done. And I saw a lot of the traders that are working on the desk here, a lot of the clients, they were buying that dip actively here yesterday on the sell-off. And not only in the gold market, but in the silver market and other outside commodities here. So what you'll do is you'll look at the dollar, you'll look at yields, you'll look at the technicals, and sticking with those yields, you look at the CME's Fed Watch tool. So you see where the 10-year treasury yields are at. You go up and you go to your bookmark tab where you look at the CME's Fed Watch tool. You look at the October 28th, 29th meeting. You'll see there's a 94.6% chance of a 25 basis point interest rate cut. You'll see a 5.4% chance of no change here as far as the interest rate cut. You monitor that flow there. Then you monitor what treasury yields are doing, the dollar index, and the gold market. Then you look at outside investment flows, additional drivers to the gold market here. What are the ETF inflows doing here? Are they continuing to rise? Well, if you look at some of the headlines here and you look at those yields, you see ETFs increase their gold holdings for the 9th straight day, and they came back hardcore into the silver market here. So now you've got those ETF flows, and then what do you also have? You have central bank buying continuing here. Now it has lightened up a bit, but you're continuing to see them diversify their reserves. And what do the ETF flows and what do the central banks do when they buy into the gold market? Because they're less price sensitive, that provides structural support to the market. So now what you've created by looking at these checklists of all these items is a multi-factor model. So what you have to do is you have to create your vehicle or choose your vehicle for speculating in this. And I hear a lot of people with their physical holdings that are quite content with their physical holdings, but what are the physical holdings doing? Are you trying to just diversify long-term assets? How long will those long-term assets remain in place? Because many people that purchase physical metals will never ever sell these metals here. They'll actually just gift them down to their heirs and things like that. So what did it actually accomplish for them specifically? Peace of mind perhaps, but you want to look at what you're trying to accomplish. So if you have a strong conviction on a market, you want to choose that investment vehicle. And that's why I believe that looking at the futures where you have the 1 ounce, the 10 ounce, the 50 and the 100 ounce contracts here, that you could start to play in these and you could try and monetize the performance of these different investment vehicles. Now, my personal view on the miners, which I hear a lot of people add, and that's what we do have for Blue Line Capital, our wealth management solutions. We also have a mining alpha portfolio where we break it down into 10 different miners out here, and these are reserved for these types of investments for some of our accredited investors, some of the investors that have a wealth management account with us. But my personal view on the miners here, if you're going to take just a single factor bet on a miner here, you've got too many other variables in here personally that could potentially jeopardize performance, like management, geographical list, and a laundry list of other things that I don't have the mental bandwidth to worry about what the CEO of a mining company is doing and what they're doing with their balance sheet. Are they continuing to issue shares, take on debt, and what types of M&A activity are they engaging in? So that's why I choose the futures contracts, in my opinion, I believe are the best pure price investment vehicle for a individual that wants to speculate on the direction of the underlying metal. Now, that's a lot to unpack here. And sticking with the miners here, we did see Freeport-McMoRan. It did get a buy and an upgrade here by Citigroup with a new price target of $48. So the gold miners, including Newmont, they are in focus this morning here. Now, while my personal view is not to overly speculate in individual miners, I'm just saying that my preferred investment vehicle, again, is going to be the futures contracts because of the pure price play. Now, if you look at the equity markets here, equity markets, they did have a sell-off and a little bit of a rattle here yesterday. You are seeing them edge higher here after yesterday's declines. And the move, it's lacking some conviction. We haven't broken back above that 6,800 level. There's a lot to talk about whether that AI stocks, they are nearing bubble territory. You're going to hear a lot of people about that. And what they really don't understand is what the AI is doing to individual companies and also individual sectors and industries here. So you see the S&P 500 up 0.2%, up 13 points, 67.74. The NASDAQ up about 0.25% at 25,100. The Dow up 100. The Russell, the small caps, that's where I've been focused on, 2484 edging higher after yesterday's sell-off and up just under about 0.5%. So a lot of attention here is going to turn to the FOMC minutes later, where the FOMC decision, it appeared dovish on paper here, but the minutes are likely going to sound hawkish, with several officials pushing back on the pace of the easing that was going with the inflation risks here. And you're going to see a handful of speakers come out here today and talk. Now, if you look at that tech bubble that we were just talking about, really Goldman Sachs, they came out and they said it was too early to worry about a tech bubble, that the rally in tech has been accompanied by robust earnings growth, and we're going to enter another earnings season here coming up, where previous bubbles were just mainly driven by speculation. And another thing in the gold market and the silver market is we haven't seen over speculation in those markets as you look at how much investment was going in there, as far as you'll look at CFTC positioning data and things like that. Are these things overbought in a sense where there's so many investors over speculating in that market? You look at Jamie Dimon said that JP Morgan's investments in AI are really paying off, with the cost savings matching the annual revenue or annual spending that they are getting to develop this technology. Basically what they're saying is that they're spending X, they're getting Y, and they're seeing these equal or greater coming out in the end. So you look at that dollar index up 0.25%, 10-year treasury yields edging just a bit lower. Volatility index, now that's another one. If you look at the chart on the volatility index, we've gone sideways here, and that's something else that plays into my model. Where are we at on the VIX? Are we breaking above 20? Because above 20 is going to cause a lot of mess in the equity markets. This is where I see traders, they really get triggered on the emotions when we go in, like we're going to break, it's going to collapse, and then what happens is the VIX backs off and then they get chopped up here back and forth. You really want to see that volatility index stay above the 20 mark in order to see that continued downtrend take place here and not see less of that choppiness, because when it comes back below and as the VIX sells off here, you'll see people come back in where their models factor in the VIX and they'll start buying the dip in the US equity markets. You look at Asia, you look at Europe, European stocks, they gained. They were really led by the miners. And we saw French stocks, they rose as the outgoing prime minister said he saw a possible path to end the political deadlock here and avoid those snap elections. You look at the Asian stocks, those fell. They were driven by the tech losses here, a little bit of concerns about the AI boom. So a lot of times their story will lag behind ours. So we saw Oracle get hit yesterday. We saw a lot of the tech stocks get hit. And then Asia, they'll open up that night and they'll start to do the same thing. As things unwind here in the overnight session, you'll see that our market will normalize. So we're really leading the path because of our AI exposure here in a lot of these indices. You saw the MSCI Asian Pacific Index fall as much as 0.8% here, and that was the most since September 26. So what are the government, or what are the betting market's thinking about? The government shutdown, interest rate cuts? You got the poly market. It's really looking at October 15th. So next Wednesday, 7 days out and later, you got about a 75% chance that they are going to resolve this government shutdown. So they don't see any path here this next week. You look at the poly market when it comes to interest rate cuts, 89% chance of a 25 basis point interest rate cut. And then back to those ETF flows, which I add into my model. So remember, checklist, you want to have what's the dollar doing? What's the yield doing? What are the charts doing? Are they signaling higher highs and higher lows? Are they signaling lower lows and lower highs on the charts? Are we breaking key levels of support here? And then you start to look again at those ETF flows here, with the ETFs and the gold, they increased for the 9th straight day. They came back in heavily into the silver market looking for that dip here, adding about 5.67 million troy ounces of silver. You also saw palladium increasing about 28,000. All these I monitor in the chart pack here, and you want to see that, you want to look for it. And if you're not getting the emailed version of it, you can always log into the portal and get it there here. So on the gold, unchanged, 17% year to date, 9th straight day of growth here, longest winning streak since June 24th. And total gold held by those ETFs rose 17% this year to 97.4 million ounces. The highest level since September 8th, 2022. So you guys got any questions? Give us a call here, shoot an email. You want to open up an account, takes 5-10 minutes to do. Guys will help you out here, no problem doing that. We'll get you up on a platform. We'll get you over the symbols here. You can start looking at that and choose which different vehicle and which different futures contract is right for you. We also have a lot of people trading in the cryptocurrencies, the US equity markets, the energy markets here. Natural gas one starting to signal some higher lows on the charts, up just under about 0.5%. Throwing that a bit on the radar here as well. So again, remember, futures and option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading.